Welcome to our program. It's good to see you.
Thank you, Scott.
Be more specific strategically. What does it mean when we talk about small caps? Because I think it's a good point of debate right now.
Yeah, well, thank you again for having me. It's why I wanted to lead off talking a little bit about small cap, because technically when the cost of capital gets cheaper, which with the Fed sort of pumping the brakes at 50 bips, we saw that little pop in small caps. We're still in a slowing economy, albeit not slowing as quickly as maybe people had anticipated. And so, the trend for small caps is still getting teased out because they're so dependent on domestic consumption. Although from a selective standpoint, they appear to be pretty ripe for some M&A.
I can't help but think of higher for longer. And as we talk about rates ultimately going down because of what the Fed's doing, how do we think about the prospects of higher for longer as yields have been going up and it's obviously weighing on this trade?
Well, the good news is that look at how great the economy is doing with these high interest rates we've been living with now for the past few years. And so the most important thing I think investors need to know is that we're going lower on rates. I think it's less important like how much and when, other than the trend and the theme for rates is going lower. What I think we need to see, though, to get like a real bump in small cap is like a real turn in the economy from a consumptive standpoint. What's challenging about that and for the small cap trade is that while markets and economic data are in parallel universe, they're operating in different time zones, and markets are forward thinking while the economic data is printing what's happened in the past. So I think it's really crucial for investors to be forward thinking, which is why I continue to recommend big cap. And what we're telling investors is get like sort of a small cap return on a big cap balance sheet by strategically placing money across sectors in the S&P on a very selective basis. But overweighting and underweighting right now is going to be the key in a market cap dominated type return that we've experienced in the last 2 years. I think that broadens out over the next year.
And it sounds like even, when you talk about large cap or going up on in the cap spectrum, you're not focusing solely on mega cap tech. It's just broadening, but large.
Yeah, broadening, but large, because remember the thematic that's been the underpinning of this sort of tech revolution has been AI. And the broadening out of that theme now is that we go from innovators to installers. And as we see that broadening out, particularly around industrials, which is a thematic of ours in our portfolios, we should see that productivity enhancing, cost reduction kicker. In addition to the theme of rates going lower, which is why we're recommending financials, which boost the M&A activity and mortgage business for financials. And then obviously staples, which sort of speaks to the theme of a slowing economy, maybe a bit of a more cautious consumer, which makes a lot of sense. Plus you pick up a great dividend and it adds a little lower volatility to a portfolio.
I mean, at the same time, how do you currently feel about large cap tech?
I feel strongly about large cap tech, and I've been the voice of large cap tech for the last 3 or 4 years. I think it's a theme which is different than an idea, right? An idea is, wow, I wonder if this singular idea actually has legs, whereas a theme is a consensus building thematic that we have some consolidation and now some momentum behind, and that is squarely sits within software and hardware, particularly if you take a look at what corporations are going to be doing with these enormous cash balances that are getting pay cuts as rates go lower. We should see a pop in investment, research, development, and basically an upgrade in corporate systems. So that should be a boost. But it's a longer-term thematic, it's a longer-term game. So the time horizon for that should be at least 12 to 24 months for investors.
Is there a thematic case to be made for healthcare outside of GLP-1?
Well, yes, we have an aging population, so that there's that thematic. Plus, we have these innovative drugs that have come to market, not to mention the fact that with AI and the ability now to build large brain analysis around DNA and epigenetics and the advancement of biotech and vaccine and therapeutics, I think all of that bodes well for healthcare, not to mention that from a leadership standpoint, this is a sector that has a real strong bias for supporting their investors through dividend and dividend increases. So it's a core part of our income strategy in our portfolio in addition to innovation.